Now let's take a look and focus on how the markets are performing on this day. The local index and the rand have rebounded today, driven mainly by the top end of the market. Gold climbed to a more than 1 week high on Thursday after U.S. Federal Reserve Chair Jerome Powell struck a dovish tone. Mutooni, who is an analyst at ABSA Asset Management, joins us now for an update on the latest market-moving news. A very good afternoon to you, Mr. Mutooni. Good to have you with us once again. Perhaps if you could take us through how the markets are performing so far on this day.
So the markets have been incredibly positive this morning. The top 40 is up about 1.7, 1.8%, and this is led by the resource counters on the back of that strong Anglo result, and also Naspers and Process seem to be recovering from the sell-off that you've seen in the past couple of days. And I think what you're basically seeing here is a confluence of good news. The Chinese authorities are trying to reassure markets that they're not trying to shut down the IT sector or the defense sector as well, and also the dovish comments that you saw coming out of the U.S., which pushed U.S. real rates even more negative. So encouraging flows of funds out of developed markets into EMs, which is what we're seeing in our markets today.
Now, South Africa's private sector credit unexpectedly declined by 0.64% year-on-year in June of 2021. Talk us through that data.
Yeah, it's actually quite interesting when you break it up. So on the surface, it looks like it declined. When you break it up between corporate demand for credit and household demand, what you see is like literally a mirror image. Corporate demand for credit has continued to decline, whereas household demand for credit has continued to increase. And I think just to put both of those into context, corporates last year drew down on a lot of their credit facilities, and up until now haven't needed to expand or borrow more because of the lockdowns, because of the low economic activity and the diminished need to invest. Households, on the other hand, particularly high-income households, went through the lockdown, saved money, saved on expenses, and now when they come out, they see attractive pricing for houses, and so are willing to go out and borrow money to either buy houses or to invest or do other things. So those two components of the market are acting in a very polar opposite way. But I think what is concerning is that on a money supply basis, money supply is actually contracting or has stayed very low growth, which actually means that the level of activity in the economy is below potential, well below potential, and that isn't a situation that you want to last for an extended period of time.
Now, we see the Stats SA, they've released South Africa's Producer Price Index for June of 2021. Talk us through the significance of this data.
So, in the data, producer prices have a loose link into consumer prices. And one of the things that we've seen in consumer prices is that they've been very benign, very low levels of increase. And in fact, when we spoke to the Reserve Bank last week, we saw that they're expecting the level of increase in consumer prices to level out over the next 6 to 8 months. Producer prices increased, and it was up at about 7.8%. And this is on the back of higher fuel prices, higher oil-related prices, as well as electricity prices and a few other commodities. So there is a bit of a concern that this could feed into CPI, but I think it will take a little bit of time. The number 7.8% is higher than we'd normally expect, but I think it's a reflection of what we are seeing with regards to supply chains and what the global commodity complex is doing.
ABN Bev has released its second quarter and a half year for 2021 results. How has the group fared according to this?
So the market didn't seem to like this result. And one of the things that was quite clear is that they missed expectations. And when I looked through the numbers, I think it was largely because of higher currencies, so stronger emerging market currencies, like we've seen here in South Africa, as well as raw material costs, which is the backdrop is that PPI increase that we were talking about. And I think this is reflective everywhere globally. Analysts, I think, were also disappointed with the performance of the group in the US, and the fact that their guidance didn't change. So, in other words, you're not seeing a read-through from improving global conditions into their end. And I think on the back of this, the stock has sold off a little, and expectations seem to be quite muted for the time being.
Now, we see Anglo American, they're going to be returning an additional $2 billion to their shareholders. mining stocks continue to demonstrate the commodities boom, as can be seen in this particular instance. Talk us through their numbers.
So the thing about these numbers is we largely expected them because we saw the principal subsidiaries, Anglo Flats and Kumba, report earlier. It's quite clear across these three operating entities that, first of all, the level of debt within the group is incredibly low. And also, I think more concerning is that the level of capex expected to be spent remains quite low. So it means they have excess cash, and I guess the good thing is that rather than hoarding that cash, they're paying it back to shareholders. So we here in South Africa benefit significantly because they pay higher taxes, and it's a reflection of what you've seen in commodity markets: high prices, high volumes, and strong demand. And this seems to be a trend that will be maintained over the medium term. Very good for shareholders, very good for the tax authorities in South Africa. Long may it last.
Well, I think, Roy, we are going to leave it at that for this afternoon. Or perhaps maybe one more that I'd like to just pose to you for now. We see that Liberty also released their trading statement for the 6-month period ended 30th of June 2021. Take us through that.
So here it's another one with good news and bad news. So I guess the good news is that they're going from a loss-making position to a profit-making situation. The bad news is that within their numbers, they found it necessary to increase their mortality provision, which means that on the basis of what's happened with the third wave, their assumptions for where mortality is going to be, or rather the number of people who are going to die and their families will have to claim on insurance, are higher than they expected before, and that has an impact on the numbers. But like I said, on the positive side, they've gone from a loss to a profit, and remember, this is the business that Standard Bank is planning to buy out and take internally. So a bit of a mix of news there, good and bad. I think the bad news is that this reflects on the rest of the insurance industry, and it's something that we'll be watching for when the other insurance companies come to report over the next few years.
Roy Mutooni, thank you once again for today's market update. That's Roy Mutooni, analyst at ABSA Asset Management. Thank you for your time.